Good morning. Welcome to 3 Minutes of Markets and Money. It is Thursday, post-Fed meeting. What did the Fed say? And is it time to buy stocks? That's really the question here. Yesterday, the Fed threaded the needle with their comment saying, yeah, we're going to start tapering our balance sheet purchases, just not really sure when. Lots of caveats potentially about things that could change that, whether slower economic growth, inflationary pressures, etc., could push that taper out more. More Fed members now suggesting a rate hike may be needed as soon as 2022, yet despite all of that, markets did very well yesterday. Markets up about 1% from the open. And again, kind of really coming off this low here, starting to come up and challenge the 50-day moving average. That's going to be the challenge today. Markets this morning pointing up a good bit here at the open. But again, lots of resistance here right above where prices are. They're going to have to get through the 50-day moving average, the 40, the 20, all those moving averages sitting there right on top of prices currently. The good news is that we are very oversold and about to trigger a buy signal on our money flow index. Also, MACDs are very oversold here as well. They're not turning up just yet. That's going to take a few more days of rally here. But again, this money flow indicator suggests that this is probably a decent opportunity to start thinking about adding some exposure to your portfolio. Let me have a couple of caveats here. First of all, if you didn't like this 5% decline, that's all this was, a 5% decline from the all-time highs. If you didn't like that, you've got too much exposure in your portfolio. Use this rally as an opportunity to rebalance some risk, lower exposure to equities, raise a little bit of cash, add to your fixed income positions, look for things that really have a little bit lower beta volatility relative to the market. That'll help you sleep better at night during these periods of decline. We will have more of them as we go forward. If you've been looking for an opportunity to put money to work, this is probably a decent opportunity to add some money to your portfolio. But be careful where you put it. Financials are probably going to be under a little bit of pressure here going forward because the yield curve is flattening. That doesn't really work well for financials. Commodities are starting to show a bit of weakness here, particularly as we start to see the economy slowing down going into the end of the year. Move money towards stocks that have the ability to grow earnings in a slower economic environment and are a little bit of an anti-inflationary play. In other words, inflation really doesn't impact them as much as it does, say, commodities or in areas like financials. So again, opportunity here exists. Just be careful how you do it. Don't go hog wild, as they say. Again, we're not out of the woods just yet. Lots of issues coming up between the debt ceiling, this ongoing Evergrande situation, other things that could weigh on markets in the near term. The big challenge to be looking for here over the next day or so, got to get above that 50-day moving average before the end of the week. If we get above that, it can hold through the end of the week. That's one kind of clearing signal that we need to get to let markets rally a bit more next week. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.